Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, dubious speculation. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. Let's go ahead and jump in. So we have had some interesting developments here over the last few weeks, so we want to take a closer look at that, especially given the most recent weekly close for Bitcoin. One of the things that we have often discussed in these uptrends is that if the 8-week SMA is lost, we then typically go to the 20-week SMA and or the 21-week EMA. There are plenty of examples of it. Here's an example. Here's another example. In getting into this trend over here, right? Going below the 8-week right here took you down to the bull market support band. Same thing right here. And then, of course, same thing right here, and we went below it. Fortunately, we were expecting it to go below it. But, I mean, it still was technically a higher low. So the reason why this is relevant is because we're flirting with that 8-week SMA, okay? And, you know, it's clearly an important level. I know the 8-week SMA is a little bit hand-wavy. Like, is he really talking about an 8-week moving average? But if you look closely, if you look at the close this past week, it was 41,715. 41,715. And the 8-week SMA last week was at 41,694. So Bitcoin closed above the 8-week moving average by $20 or so, right? Not a lot. Maybe a little, slightly more. I mean, just go from 694 up to, what did I say, to 715. So about, $21 or so. So we were pretty close to getting that weekly close below it. But in fact, we have not gotten it yet, which means, the coming weeks here are going to be more interesting because the issue with closing at the 8-week and not plenty of wiggle room above is when you're in a trending market, the 8-week moving average is still going higher, right? So now the 8-week SMA is all the way up at 42,297, which is actually slightly higher than the current price at the at least time of this video. Okay, and so again, that's, you can see that a lot of times actually the reason we dropped below the 8-week SMA was we basically just trended down. We trended towards it and then we fell, right? We trended towards it and then we fell, then we fell below it. We trend towards it and then eventually we go below. Same thing, right? It's like the same type of move. You trend towards it. Now, again, I mean, that doesn't mean that you can't pop up this week at all. I mean, you can see there have been moves where you get to the 8-week and you pop up, but at least all the moves that we've seen for the last year or so, once you get close to that moving average, it's only a few more weeks typically before you at least check in with the bull market support band. And by the way, the bull market support band now is ranging from around 35.6K up to around 37K. So I think, keep those numbers in mind. Around $36,000 is essentially where that range is, 36K. So if you were to wake up one day and saw Bitcoin at 36K, then just note that also corresponds approximately to, somewhere within the bull market support band. Now, there's a lot of other things, sort of think about as well, not just the 8-week moving average, not just the bull market support band or the interactions of it, but there are some other interesting levels I think to consider as well. And if you just isolate the 100-week moving average, which we've talked about a number of times, you can see that, I mean, last cycle we sort of broke above the 100-week SMA, and then once we broke above it, it took about 5 months, then we were back at it, right? So I mean, if we were to just sort of assume something similar, again, it probably won't play out in an identical manner, but if it did, I mean, you're looking at early March. Potentially getting back to that level. Now, back in the cycle before, you can see that it tested it a lot sooner. Once we got above that 100-week moving average, we then tested only about 8 weeks later. So currently, it's already been about 13 weeks, right? So, right now we're sort of in between this one and this one in terms of how long it took to retest that 100-week moving average. But you could always get a scenario where Bitcoin retests the bull market support band sometime in the next few weeks, and then goes back up. Gets a bounce off of it for a few weeks or something, and then tests the 100-week SMA a little bit later on. Like that could always play out as well. And just remember, I mean, many of the times when we test that bull market support band, the bulls like to come in and defend it, right? In fact, it was over here in Q3 of the pre-halving year where they were unable to defend it, and we went below it for a little while. So I would be looking at that, as potential areas of interest. Now, there's sort of the other side of things that we've discussed as well, and that's, all this sort of analysis kind of assumes that the status quo remains unchanged. But there are, of course, things that could disrupt the status quo. And some of those things continue to be things like yield curve inversion, potentially seeing rate cuts relatively soon. One of the things we've talked a lot about is that, as rate cuts arrive, it's typically not the most bullish thing for risk assets. Not because rate cuts in and of themselves are not bullish, because a rate cut in and of itself is theoretically bullish. But the problem is not the rate cut itself, it's why the rate cut is happening. And in this cycle, even more so, given where inflation is, you'd have to imagine that if a rate cut were to arrive with inflation as high as it is, there's probably a reason that that's happening. And so, again, last cycle, we did get sort of a mid-cycle top right around the time that rate cuts arrived. And again, like it's not an exact science. We really only have one data point for Bitcoin to compare to. And, it's foolish to say that it has to play out the exact same way. If you look at things like the S&P 500 or risk assets in general, sometimes they top out well before rate cuts arrive. Sometimes they top out a little bit after they arrive. But in most cases, rate cuts arriving has not been a great thing for risk assets, at least over the short term. When it becomes a good thing for risk assets is once you get to the last rate cut, is when it tends to become really good for risk assets. Because once you get to the last rate cut, it basically implies that the Fed, the market thinks the Fed has done enough, and that they've gone back to sufficiently looser monetary policy to get the economy back on track. So, in terms of that, I mean, I will remind people there's always that logarithmic regression rainbow, which I will not shy away from. I know it's one of those things where, I know that I get a lot of, certainly a lot of flack for talking about this sort of stuff, but I can't help but just remind myself that, these risk-off dynamics can happen, and election years, oftentimes, early on in the election year, sometime early on within the first half of it or so, there's something that happens. And it kind of makes sense. Like, I mean, especially the last couple of cycles, right? I mean, if, for the politicians, I imagine it would be nice to have a reason for the Fed to start printing. Just so you're not going into an election with rising delinquencies and also extremely tight monetary policy, right? You'd ideally want looser monetary policy going into an election, right? So last cycle we had a hard landing, and the cycle before that it was a soft landing. So, and again, like as far as 2016 is concerned, back in 2016 we did have a soft landing in the U.S. economy. Other places got hit a lot worse, but the U.S. was able to avoid a recession. And arguably, we got a soft landing. So the way that I would probably interpret that going forward in terms of like what landing scenarios there would be, I would say that eventually holding the 100-week SMA, that would be akin to a soft landing like what we saw back in February of 2016. Failing to hold that would be akin to a hard landing like we saw back in 2020. And that is something that could also happen, right? And going back to the regression stuff, the reason why I bring that up is if you look at the regression rainbow, one of the things we've noted is that oftentimes you get sort of your first, you go to one regression band, and then sometime later you go to the one below it, right? And sometimes it can be a higher price. Sometimes it can be, this was sort of like a double bottom. This over here, it was a higher low. Right? It was a higher low compared to this. And then this cycle, you can see that we came down to where this one was, right? Same one as this one. And if it were to go to a regression band lower, you can see that the lower regression band now corresponds loosely to those prior lows. So that would ultimately be what I would consider to be a hard landing, right? If you were to, kind of come up to this, this region up here, and then ultimately drop into, into some type of hard landing, scare, recession, whatever, just to sort of validate why they have to go back to QE. Because I mean, normally in election years, they're going to be looking for a reason to go back to QE. In midterm years, like your 2022s, your 2018s, your 2014s, there's not nearly as much incentive. I mean, those are the years where things can get often pretty bad for risk assets. But in your election years, there tends to be a sort of a reason, I think, that tends to happen, that gets us back into looser monetary policy, quantitative easing, just so going into the election, things aren't as bad in terms of that side of things. Now, of course, it could always bring forth another wave of inflation, right? But that, I think, and it's interesting because the 100-week SMA is starting to curl up here right at this regression line, right? Which is the same place that it came back over here. So for me, a no landing is you don't even go back to the 100-week SMA. I don't think that's going to happen, right? I do think there will be some form of a landing, whether it's a soft landing or a hard landing. We're yet to find out. I think a lot of people, sort of prematurely throw in the towel and say no landing just simply because it's taking a long time. But remember, and we have said this for a long time, that at least based on last cycle, Bitcoin topped out right around the time that rate cuts arrived, right? Right around the time that rate cuts arrived. And it's impossible to know when the first rate cut's going to come. Markets are currently thinking sometime around March. So, that's at least what we saw last cycle. So before coming to, before jumping to any conclusions, I would say, well, what happens on the other side of the hiking cycle? Imagine in 2019, if you had prematurely assumed that we were in a, it was a soft landing, which, by the way, we also had an inverted yield curve, right? We did. And it became uninverted right around this time, as the rate cuts arrived. So, imagine like in 2019, if you had assumed that it would be a no landing scenario, and then because looser monetary policy was arriving, only to then go back all the way back down to the 100-week SMA, right? Guys, there were a lot of people that were calling, for 300K back in 2019 and 100K back in 2019. Look at this rally that we had. It was a strong rally. But it ultimately topped out around the time that rate cuts arrived. Now, rate cuts are not here yet, right? So, I don't know. It's hard to say if this is a local high or not. You can see that it actually went all the way up to the regression band. So perhaps that's the high. That it's always possible that that's the high. It's also possible that, we go back down, test the bull market support band, and then get one more final pop back up to the upside, so that we finally see the Ether Bitcoin valuation break down, which is something that I do think will happen. I know it's been a long time coming, and I also know that Ether Bitcoin did get a bounce this week. And we talked about that, right? Like it's not something that was unforeseeable. I said in the last video on the Ether Bitcoin pair that I said, look, it could bounce back up to around 0.056. That's what I said, right? Receipts are there. And clearly it's above that, right? Like it's above 0.056. So it has gone a little bit higher so far than I initially thought that it would. But I will simply also take a step back and say, well, be that as it may, we did see something similar last cycle. This bounce that Ether Bitcoin got right here in May of 2019 occurred about 2 to 3 months before the first rate cut. And it was about a 17, 18% move in that week. And then this one was also a 17% move. So I think what we should look for with the Ether Bitcoin pair is does it fade back down? Does it slowly fade back down over the next 2 months? Okay. Because I think that's something that could theoretically play out. So I would be aware of that over the next 2 months. And if it does do something like that, I mean, it could still first come, with a Bitcoin correction, right? Like Bitcoin could always go back and test some of these prior levels that we've outlined before trying again to break the Ether Bitcoin valuation down. I think something like that certainly could play out. So I think it's worthwhile to keep an eye on the 8-week moving average this week. Again, it's currently around 42.3K, which is right around the current price. If we get below it, good chance we're going to go test the bull market support band, which is all the way down, 35K to 37K. Just think about 36K or so is where it is, which, by the way, from the current price would represent a drop, of approximately 13% to get back to the 21-week EMA. All right, so it'd be about a 13% drop to get back to the 21-week EMA, and it'd be about a 16-17% drop to get back to the 20-week estimate. If it were to happen this week, if it were to happen a couple of weeks from now, of course, it would, it could be a smaller drop. But just know that this is a pattern that we've seen a lot. If you were to look at sort of the extension from the 20-week SMA, the short-term bubble risk, seems like it could be playing out how it did back over here in April, right, of 2023, where you get this, this sort of high here, and then while you do get a higher high, we still then just slowly bleed back to that 20-week moving average, which could be, sort of underway right now. So I would keep an eye on that idea, and I still think that is a plausible idea to play out. If you guys like the content, again, please do give the video a thumbs up. I probably don't say it enough. I know I just sort of say it in the intro, but it does help. And please, there's also the subscribe button that you can always hit. Always nice to get more subscribers on the channel. And we do, again, have the sale on Into the Cryptoverse Premium at intothecryptoverse.com, where you can, of course, get access to a lot of tools that we have throughout the website, tons of charts, not only for Bitcoin, but also for a lot of different cryptocurrencies. And it goes beyond crypto. We also have a lot of things for stocks and for precious metals and macro and all that sort of stuff. So check that out, intothecryptoverse.com. Thank you guys for tuning in. I'll see you next time. Bye.